back. Thank you so much for staying tuned in. Well, it was an set of numbers for Tata Consumers in Q4. The profit was impacted due to an exceptional item. When you look at our revenue, on the other hand, that managed to grow 8% in line with estimates. In fact, Vinny is joining with more details. Vinny?
Good morning, and absolutely what we're seeing in terms of Tata Consumers numbers, actually it's an inline number. Profit was a miss only because of the 216 crore exceptional item that we've seen, mainly because of the scheme of arrangement, the costs over there. There have some asset write-downs that have happened. So because of that, this is impacting in terms of the profits of the company. Margins have seen a sharp improvement, around 200 basis point expansion in terms of margins. We were expecting around 100 basis point expansion, so comfortably above what we at ET now were expecting. So yes, that's what we're keeping an eye out on. Indian business has seen a growth of around 11%. International business has seen a growth of around 7%. Slight bit of a slowdown that one could say that we're seeing for the India business in terms of the growth over there. Now, other than that, look at some of the other highlights that have come in. Beverage business, India beverage business grew by 3%, but tea volumes have remained flattish. Previously we had seen slight growth, so tea volumes this time have remained a bit flattish. Market share loss again happened in the tea business. We've been seeing that they have been losing market share in the tea business. So that's something one should watch out for. The premium and sub-premium segment continued well. India food business saw strong growth, including Capital Foods. It was 20%, while like-for-like basis growth of India food business was around 11%, and volumes of India food business was 4% on a like-for-like basis. Salt revenue grew by 5% as well. Margin expansion was because of most of the international markets. There was a pricing intervention that happened, softening in commodity costs as well as strong operating cost control measures is something that supported the margins of the company. All in all, if you look at it, brokerages like Goldman Sachs maintained their rating of neutral, target price of 1,030 rupees. They say India's growth is slowing down overall for the company. Margins were driven by the international side, and they believe that EBIT growth marginally ahead of estimates is what Goldman Sachs is saying. Tata Consumers review coming in from CLSA, they maintained underperform rating. For them, it was a miss on the top line as well as the profitability front, but margins were slightly better. So let's keep an eye out on Tata Consumer.
All right, Vinny, thanks for taking us through that, an inline set of numbers coming from Tata Consumers. But let's shift focus to another FMCG major. Then, Vinny, HUL all set to release its numbers. What is the street penciling in? What are the factors watched out for? Largely, take us through that.
So absolutely, in terms of HUL's numbers, we could be seeing a bit of a muted set of numbers this time. A growth of only 0.6% in terms of revenues. Profits of the company expected to see a decline of around 3 to 4%, and margins expected to see a bit of a contraction this time. 23% is the margin expected at versus 3.3%, so 30 basis point contraction in terms of the margins. Volume growth expected to be at about 2-3% level is what we expect, which has been going on as a trend for HUL in the last couple of quarters. Single-digit revenue growth, mainly because of the rural slowdown. The recovery is not as fast as one was expecting, as well as increasing competition, competitive intensity, as well as in terms of increasing competition from regional players. Continues. Demand trend is similar to what we saw in the last couple of quarters. Nothing new on that front. Food and refreshment, we're expecting a muted growth there. Subdued growth is expected in home and personal care segment as well. Now, overall, this time around, the margins are going to be impacted because there is that impact of increase in royalty, as well as there was a expiry that has happened of the GSK consignment arrangement, because of which we're seeing an impact coming in on the margins. Let's keep an eye out on in terms of commentary that is coming in on the health food drinks segment that is there. That's seen a lot of trend right now across the FMCG sector. So any comment on that front, competition, how is that shaping up, demand trends, as well as raw material pricing going forward in terms of an outlook over there is key to watch out for.
Thanks, Vinny, for that. Okay.
If you like this video, then like, share and subscribe to ET Now.